Government is an institution to steal money from ordinary people. They will do everything against ordinary people, and so you have to take precautions ahead of time. Someone will say gold is very expensive. In my view, that is true. It's expensive, but it's more a reflection of the value of money that has gone down, collapsed. This is a very complex issue. How to run a government. There are philosophical issues about it and so forth. Well, if we observe the Romans, there were many Roman emperors who actually run the business, but in many other cases, it's the bureaucracy that ran it or the Praetorian Guards.
Yes.
They auctioned off the title of emperors. The impact of monetary inflation on a society, because some people benefit from the monetary inflation. They become immensely rich and influential. And other people, they are impoverished because the cost of living is going up more than their wages. And they also suffer because when you can make money, big money out of speculating and speculations and speculative activities, it drains actually liquidity from productive sectors of the economy into the speculative sectors of the economy. So some people benefit from the monetary inflation and others suffer. And the Fed rate cut looked probably at a labor market that is weakening or is far weaker than the Biden administration statistics would have suggested. That I want to point out, because the labor statistics are statistics that are published by the government. Wall Street and the media then takes these statistics and they don't check about the validity of them, and they publish them because they don't want to destroy the inflated asset markets. But the labor market is probably quite weak. So the Fed, if they looked at the labor market, there was maybe a justification for a 0.5% cut. And I know some experts there, people who are knowledgeable about the economy. They think the Fed should have cut even more. This is not my view. But this is where the distortion of the monetary inflation comes in. The labor market is weak, but the asset prices are in the sky. And to cut the Fed fund rate when the Dow and the S&P and the Nasdaq are all at all-time highs, and home prices are at all-time highs, and the Fed knows that the problem of the housing market is affordability. According to Goldman Sachs, affordability is at the lowest point ever in the US. That is a problem. But you understand, the Fed and Wall Street is about one and the same. They don't want to destroy the asset markets. This is a big concern about once you have inflated asset markets, you have to keep juggling them up. So they probably cut rates to prevent stocks from going down. But what they can't do is prevent the dollar from going down. and maybe it won't go down a lot against the euro and the yen. But it went down against gold, which is an honest currency, and it went down against bitcoins. So this is very complex. This is a very complex issue, because if you look just at the labor market, maybe 50 basis point cut was justified. I'm not sure about it, but maybe. Some people argue it was justified. But if you look at the asset markets, there's a crazy to cut rates when the asset markets are in the sky. Actually, in the recent issue of my report, I discussed two charts. One chart was by the bank credit analyst, and they calculate the gold price in real terms. In other words, inflation adjusted, but inflation adjusted by the figures published by the Bureau of Labor Statistics, in other words, the government. I have been following for the last 30 or 40 years the, the conference board and also a fellow called John Williams. He has a website,
Yes.
shadowstats.com. Now, John Williams is a decent fellow. He has no agenda. He doesn't belong to the Republicans or the Democrats in his views about the economy. He just is a brilliant statistician that takes the figures that lead to cost of living increases as they used to be calculated in before 1981 or 82. In other words, the old methodology. Now, according to the bank credit analyst, what is interesting is gold was very inflation adjusted, very depressed in the late 60s before the first big bull market in gold, 1971 to 1980. And then it became again very undervalued in the years 1998 to 2000. It became overvalued in 1980, inflation adjusted, and again in 2011, the last peak of the gold bull market peak was, I think, in $1,941 or something like this. And then again now it's very overvalued in real terms, according to the government statistics. But according to the statistics published about inflation by John Williams, the price of gold here is exactly where it should be. And I can say, I mean, I'm not exaggerating, but say, I grew up with a gold price of $35 an ounce, okay, until 1971. The gold price went then to $850 in 1980, and now it is, say, at 2,600, whatever. My view would be that the cost of things and services is up, say, around 10 times since year 2000. You know, to buy a house and to go, I don't know, out at night and so forth. I think it's not totally unrealistic. And the gold price is up about 10 times since then, a little bit less. So someone will say gold is very expensive. In my view, that is true. It's expensive, but it's more a reflection of the value of money that has gone down, collapsed. And you understand, before I could say, when I grew up, my grandmother and grandparents always told me, Mark, you have to save money and put the money in a bank on deposit. I don't want to bore you with the story of my deposits in the Kantonalbank Obwalden in Switzerland, but it wasn't a good investment. But the point is, at the time, money in the bank deposit was safe. And nowadays, it's not safe. That people have to realize. What happened in Brazil a few years ago and recently in Cyprus can happen again. Whereas my gold in my safe, and I won't tell you where I keep it, in my office or the garden. Government is an institution to steal money from ordinary people.
The last thing they want is you taking your cash out of the bank and putting it in your own private vault.
They will do everything against ordinary people. And so you have to take precautions ahead of time. Simply, let's say 40 years ago, if you look at gold reserves and you look at the financial market, then gold reserves were very large as a percentage of the value of stocks and bonds. And today, the global financial market is a huge bubble. And the gold, you would hardly notice it. It would be just a dot like this in this whole world of financial markets. And of course, if you want to have some security, I would suggest, but I've done this for the last 40, 50 years, to say, put part of the money that you have or that you earn into gold physically and keep it in a safe with an institution, or keep some with yours. But this is something relatively safe. It's not the best investment. You made much more money by owning Microsoft over the last 30 years than by owning gold. But you also made much more money by holding gold instead of stocks that went bust after the dot-com bust and the meme stock bust and the SPAC bust and so forth and so on. So it's something very safe. It's not the best to own, but it's safe. Let's put it this way. Like if you have a life insurance, it's best that you don't need it immediately. But your relatives may be happy to have a life insurance on your head. I mean, if you are China or Russia or any nation and you have slight objections to the foreign policies of the US, you'd be mad to keep US dollar reserves in the United States. You understand? They can freeze your money. I mean, if I have assets, I don't want to have some dumb bureaucrat without any proper education freeze my assets.
Well, I mean,
you have to be really brain damaged to keep all your reserves in the United States. I mean, quite frankly, the dollar also, I have to say this, and I've been traveling a lot all my life, and you can measure the price level here and the price level there, and so yes, say Singapore is expensive, but it's also very safe. You understand? I'm prepared to pay something for my personal security. If I walk at night in Singapore, I can walk drunk or sober or whatnot. Nobody will attack me. But the other cities in Europe and the US and so forth is no longer safe. So the price level is high. But in other countries, say, I live in Thailand, the price level, I'd say, is about 70% lower than in the United States. For food, maybe 80% lower. But there are things, items that are more expensive. If I want to buy a Porsche car or a Ferrari, which is not necessarily my desire, but because I had it already, but it will be more expensive because the import duty on luxury goods are very high. And this is my view, but other people may have different views. The bond market over the last 3 years or 4 years, since the high of the bond market and the low of interest rates in August 2000, so 4 years ago. Since then, interest rates have gone up a lot in the US, and the long bonds, the government bonds, they have tumbled, okay? Say we take TLT, the ETF, long-term government bond ETF, has tumbled to a low last October. Since then, interest rates on the short end have been kind of easing a bit. And the bonds have rallied recently. Now, the reason I own these bonds is I think the economy is much weaker, and it will be revealed very soon because the Biden administration has been lying about everything. I don't know a greater lying machine than the Biden administration. That's a complete joke. And so the view of other foreigners than the Democrats in the US. Anyway, so on that basis, maybe bonds can rally somewhat. The other thing that you brought up about the financing needs of the government arising from the fiscal deficits, and this is unusual now in these elections, both candidates have no intention whatsoever to reduce government spending. Under both presidential candidates, their names will disappear, hopefully, from history soon. But under both, government spending will go up. Under the Republicans, more on that side of the economy, on the Democrats, more on that side of the economy. In any way, the deficits are here to stay, and the financing needs will go up. And so, after a period of diminishing inflation, which we are in at the present time, inflation will go up. And as you pointed out, in my view, we will see interest rates much higher than in 1980, when the 10 years touched more than 15%. So we could go to interest rates like in Turkey, 60, 100%, or like in Argentina. That is the model. The model under Harris is the Venezuelan inflation model.